All right, ladies and gentlemen, boys and girls, and children of all ages. I'm just doing a quick live video. I know I haven't been on in a little minute in the last week, but I have been running around back here in Augusta, Georgia, back in my hometown for a little bit. So I decided to do a little video. I was doing some reading, and I saw something that Charlie Munger said a while ago. He was talking about diversification, I think that he coined it. And then I saw something that I was listening to Phil Towns' book, and he had a thing called he called it. He spoke about diversifying, right? And he said something that was pretty cool and interesting. Another interesting perspective. But they said, hey, when you're diversifying something, right? He's like, most people that diversify don't know what they're doing. I said, you always heard the terminology. We all heard the terminology that says, hey, when you diversify, diversifying means you are um, not putting all your eggs in one basket. You're not spreading yourself thin. You're not, you know what I mean? All those type of things, right? So that's what I always kind of taught. Hey, get a broad base, do things like that or whatever, right? But the thing about diversification, it said that, hey, if you know that McDonald's is a great company, you know that's a great company. It's a company that you're going to invest in. It's a company that you're going to um, all these other great stuff. You just knew it's an absolute great company, and it's going to return you 15 to 20% a year. Why would you then go spread your money other places? Because it was like if somebody knew what they were doing, they knew this was a good company, or they knew they had a couple of good companies. Why waste your time diversifying? So not to say that I've seen that people you heard the saying that, oh, this person only has one or two three funds inside their mutual fund or stocks or whatever the case may be, portfolios. But it made me think. It was like, if you did know something that you was in a good company, that it was going to be a great company, why waste your time spreading your money out between two to three companies, two to three industries, all the other good stuff? If you knew that, hey, if I do this and do this, I'm going to hit the lottery or my money's going to compound, why am I spreading myself so far over, right? It's just that people that don't diversify, not all, but the same most people that don't diversify, is that they have a sense that they know what they're doing. Like a big cryptocurrency guy, they know that cryptocurrencies are going to be at $100,000 by the end of the year. They know this for certain. Why would they diversify and spread their money over different places? Why not double down on that belief of cryptocurrencies going to 100,000 and go ahead and quadruple your money or whatever the case may be and be done with it? So it's just saying that when people diversify, do they really know what they're doing? Is it a second guess, or is it a I'm not sure on this, just in case this fails? Are they certain? Because some top investors say, hey, listen, people that know what they're doing don't diversify. What's going on, Brandon Nail? So I thought that was a pretty interesting perspective as I was on the plane and reading my new book. And I saw that again. I said, people diversify when they're uncertain and they don't know what they're doing. So it's like if you know what you're doing, why diversify? And since I kept hearing this, I'm like, is diversification a bad thing or diversification? And the downside to it too, I met this person. They came up to me and they was showing me their portfolio. And this portfolio had about 50 stocks in it. Oh, we invested into this, 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 we invested into this. And I'm just looking like, goodness, like I know this portfolio can't be performing that well. Because if you got 50, 60 stocks in a portfolio, I can guarantee you overall that portfolio is probably not beating the S&P 500. Now, granted, you're going to have some of the investments are going to do well, but overall, when you add up all those 50, 60 stocks, right now the S&P 500 is up what 20 some percent so far this year or whatever. And I guarantee you, people who got those big portfolios are not seeing those. J. Stay Hill says, I think people that diversify are applying a law of averages. That's true, but why would you average out if you knew for certain that, hey, this is going to be this, Why would you waste your time? If I knew cryptocurrencies going to $100,000, why would I waste my time peddling around with uh, building a diversified portfolio? Screw it. Hey, you know what? I'm going to put my 10, 12, 13, 14, 15, I'm going to throw all my coins in. If you knew for certain cryptocurrency, I think it's about what, 10,000 a day? Who knows? Right now, it just probably shot up to 30,000. Who knows? But let's say if it's at 10,000 a day, and you knew for certain that, hey, cryptocurrency is going to be at $100,000 by the end of the year. Quit the crap. Take your 10, 15, 20, 30, 40, $50,000. Screw all that diversifying and creating a broad portfolio. Why don't you just put your money in one thing? And I said, I couldn't help but swallow that pill and say, they're right. They do got a point. They do got a point. Because I have a portfolio, obviously, and I look at the portfolio and I got a couple things. As the more season I got less and less things in my portfolio. But if I'm looking at things in my portfolio, I'm like, wow, if I knew Google, like I have Google, if I knew Google was going to be, you know, in the next 20 years, this $1,000 stock is going to be worth $300,000. Why would I waste my time diversifying? Why do I need to hold Apple as well? Why do I need to hold McDonald's and Berkshire Hathaway and all these other companies when I can just throw it straight into one thing? So it made me sit back and think and say, instead of having this big, large portfolio of all random stuff, which my portfolio is not that big at all, because as big as far as selection wise, I kind of narrowed it down to where I want to be. But I used to have this big portfolio, and this person walked up to me and they was telling me how diversified it was to impress me. Almost seeing it was like, oh, guess what, Prince? I also have this, and guess what, Prince? I also got that. Prince, I also have a Russian company. Prince, I also have a Chinese company. Prince, I just invested into this, and this. One thing says, they said here says basically the thoughts is if I have 10 stocks, maybe 50% will be successful and the others outweigh the losses over time. That's true. That's somebody who doesn't really know what they're doing, right? If you really don't know what you're doing, it's like, you know, hey, I won't say don't know what you're doing. I would say the people that know they got something or they have evaluated a company. And that's why you always hear people say, hey, an average person should just buy the S&P 500 because the average person cannot evaluate companies properly, and they're probably going to end up underperforming the stock market. Because what a person's going to do, Jay said your mentor is diversified. He has at least 50 stocks. Yeah, that's true. But you got to think about it. Buffett's portfolio is 250 billion. 250 billion. And 50 stocks. I know people who got $10,000 portfolio who got 50 to 60 stocks. People have sent me their portfolio and it's like pages. I'm like, goodness, they're diversified like crazy, right? But for Buffett, you know, if you own 50 stocks, your stock portfolio is $250 billion. That means on average you got about what? If you divide 50 into 250 billion, that means you got a couple billion in 50 stocks, right? That's a huge portfolio versus other people got these portfolios. I seen people with a 50 stock selections in like a handful of companies. Not a handful of companies, but in like 50 companies. I'm like, wow, you spread all your money. You just got one share of this, two share of this, or whatever the case may be. Then you also have the situation to where when you get up into that hundreds of $1 billion range, right? You get to a point where you only could buy so much of the stock, right? Hey, I have too much money. I can't go buy $2 billion worth of Coca-Cola, so I have to spread it somewhere else. What's going on, Stephen Lane? To the man, the myth, the legend. Um, Guard on TV said, "What's up, Prince? Great topic. I think it's just a matter of what works at the time to your financial situation. Like you said, Warren on another level. Yeah, exactly. Yeah, somebody commented and said, man, Warren Buffett got like 50 stocks. I'm like, come on, man. This man got a $250 billion portfolio, and he still got 130 billion in cash, right? So to put, I've seen to compare that to the everyday person. that says, "Hey, look, I got all of these shares." I'm like, "Why do you got so much stuff?" If you knew Nike was a great company, if you evaluated Nike the proper way, you knew it was going to be a great company that was going to double and double and double and triple on itself. Why not just jump into Nike and reinvest the dividends and get rich that way, right? But most of us, we're looking at it. I'm guilty too, right? That's why over time I become more and more seasoned. My portfolio gets smaller and smaller and smaller because when you look at those big, large portfolios and you compare them, you'll start to see that. It's look in prime example. B said, "Oh my God, I'm doomed. I have 142 securities because they got diluted. I lost 6 companies so far that went bankrupt. 142. Goodness, B. Goodness, man. What you just wake up every day and buy a new stock? 100. You now y'all see what I'm talking about? 142 stuff. B, I'm not calling you out anything. I'm just it just further proves my point. Not that you don't know what you're doing. I'm like 142, and you look at the overall performance of that portfolio. How has that portfolio performed so far this year? Stock market is just a regular old index person who don't know anything. They just went and brought the index in January and just kept buying the index. They're up about 18% already. Their overall portfolio is up 18%. But the person who got 142, you talking about 6 of the companies went bankrupt. Goodness, man. That's a huge portfolio doesn't mean it's huge because of how many securities. A huge portfolio means it's huge because of how much the portfolio is worth, right? He said, "My man is well diversified." Well diversified. I'm pretty sure you got a little piece of everything up in there. You ain't gonna have a market crash. When the market go down, something got to go up in 100. You got 142 securities. I hope that spread out pretty well. You are diversified. I mean, 142, man. But that's what I'm saying. When you look at somebody who's like, man, look, I got all these things. One is doing well. 6 of them went bankrupt. This one is doing okay. That's doing this. This is one doing that. When you really boil it down to it, you'll see that you know they're probably the whole portfolio is probably underperforming something as simple as the S&P 500. So you're like, what am I wasting my time for? Why I got all of this for? Why do I have all of this stress when my whole okay, it's like I own 142 cars and all I want to do is go to work and home, you know. And people are like, well, you got just in case this one break, you got this. You can get there fast, slow. You can have a big truck, a small truck. You can have this. You're like, cool, but if I get 2 solid cars, they're going to get my job done. My job is not to be diversified. My job is to turn a profit. I hope that's what you guys' goals are, depending on what your investment objective is. Hey, but think about it. Warren Buffett got a $250 billion portfolio, and he got 50 shares. He got 50 different companies, right? And a lot of those companies, you can't buy any more Coca-Cola, sir. You can't buy any more Walmart. You can't buy any more certain companies. So now you got to diversify, right? Yeah, you're right. He's saying are mutual funds in a 401k. That's what a mutual fund whole job is. Mutual funds are like take a bucket, put a bunch of shares into it, spread you out across a couple places, right? And that's what I always was taught. That's the first thing I brought when I started investing was mutual funds. Hey, get a mutual fund, you'll be spread out, you'll be diversified, and blah blah. Just in case something goes down, just kind of go up. So I said, okay, cool, buy some mutual funds. Then over time, as I'm hanging around and seeing and reading things from the top investors, you'll start to notice their portfolio is smaller and smaller and smaller and smaller. You get what I'm saying? So, and then you say, and then they get out. They say, well, like Charlie Munger said, diversification is called diversification. People that diversify don't know what they're really doing, so they're taking a guess, right? But anyway, I'm gonna jump off of here. I gotta get running. I just thought about that topic. Y'all leave some comments. Let me know what y'all think about it. Diversification is it a bad thing? All right. See y'all. Appreciate it. Appreciate all the love. Hit that thumbs up button. Hit that share button. All that good stuff. Peace. Y'all be easy.